Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 1st of March, 2021, 5:50 p.m. So we're up again. We were up today. Why? Well, it's pretty easy. Over the weekend, when you take a look at what went on with Johnson & Johnson getting approval for its COVID vaccine, which starts deployment tomorrow, then we saw in the COVID relief bill that the Democrats have completely dropped the wage demand of an increase. Then we saw that another demand was dropped as the Senate leader, Chuck Schumer, was trying to get a tax put on corporations that were not meeting the minimum wage guidelines, and that was tossed out. So this gives that bill a lot more chance of passage. It's still a big bill. There's still going to be a lot of talk about the $1 trillion that has not been spent off of the last money that we put out. Why does that have to just sit out there? If it hasn't been spent, could it be called back? You give this, you call that back. In the wash, you're really spending $900 million more? I don't know. But why does it have to sit if you're not using it? I've always wondered about government. They release monies and they don't get used. Well, why does it have to sit there? Because we're carrying it on the books. That doesn't make sense. We'll see what goes on. Fed Chair Powell speaks this week. You want to pay attention to that. Jobless data comes out on Friday. You're going to want to pay big attention to that. And so far, most of the economic data, from the construction spending numbers today to the manufacturing output prices paid that we saw in the U.S., they are just stellar numbers. So we have an economy that's revving and it wants to go. I made fun of it in my news report this morning. I wrote about the Tom and Jerry movie released over the weekend, and it surpassed box office results. I think that where movie theaters are open, families want to go. The kids want to go to a movie. People want to go out. You see this over and over. It doesn't matter the event. People want to go. And where you get a climate where they can go because now the weather's changing, I think that's going to be important. Now, before I get too far, I want to remind you, if you like these videos, subscribe to them here. They're free on YouTube. My paid subscriber video is totally different. It's never on these open websites where you can just go and watch it somewhere. You have to have a member login and have to be a paid subscriber or a free trial. And I do offer that, and at the end of this video, I'll mention that and how you can get in. If you have comments for me, write them. You'll notice I do answer them. All right, on the weekly area chart of closes. First of all, I had a question that came in over the weekend. It was a good one. I say moving average, and the person asked which one. It's the simple moving average. It's not a weighted, it's not an exponential. It is just a simple moving average of closes. I like simplicity. I've used the other moving averages. I understand the differences between them, and I'm not against them or for them. I prefer this. It's simple. It's in my system. KISS. Keep it simple, stupid. I like that. When you're looking at this, the market is staying over the red line, the 18-week moving average of closes, which means the bias is up. We're still not back to a price that if the market finished trading right now, even with this 2.5% gain for the week, yeah, it's pretty big, isn't it? It's still not up to the old highs in the market. When we take a look at a daily bar chart, this is a big resistance area, huge. To get through that takes a lot of work. Is the market going to punch through it at this point in time? Well, so far, no. So far, the market has a pattern of lower highs. Yes, each one of these highs is lower and a lower low. That is bearish. Let's just assume, for the sake of discussion, the market gets through and comes back and takes out this high of 39.34.5 that was made last Thursday, okay? What that would do is it would change the chart pattern and give you a lower low, higher high. It would take you out of the downtrend on the swing line, but not put in an uptrend. That's the important thing that I see. I look at where the market's fighting. It is the 18-day moving average of closes. Very important. I call that the line in the sand. You'll notice that often you get these rallies, the market pulls back there. You get a deep break. It tries to get back over. Does that not look just what we've been doing here? And that seems to be how this market is trading. Then I look at another series of numbers called Bollinger Bands. Markets will trade within these black bands 95% of the time. That's like saying, hey, I'll take any bet you want to make and that it won't stay there more than 5%, which means 95% of the time you'll win. That doesn't mean the market's going to necessarily go higher, but it's not staying under the band there and it's not staying over the band there. Traders twist that and they turn it. And I'm doing a special enhanced course on that right now where I teach what do you do the first time it hits that and you're not, for example, embedded. You're just in a market that, in fact, it's oversold. Well, I teach that the first time you hit these bands, money comes off the table. The pros take their money. I don't know if they've put this into their algorithms. I don't know if it's something they watch like I do visually in the market. I haven't created program trading, but if I were a programmer, that would certainly be in it. And that's what I think happened. And where does the market often go back to? The 18-day average. So right now, you have a market that's no longer oversold. It got that way right here with a reading under 30 and that's Friday. You corrected that today, and tonight you're back up a little. The market, I would expect, is going to fight the battle right here. If it drops again, I look for the lower Bollinger Band. If it takes out this 39.34.5, then I'm looking for 39.58.5. So I've got my parameters set, but I'm in the bear camp at this point in time with the swing line. I'm out of the bear camp with what? The bias. You're over the 18-day average, and momentum. It is not an easy chart. It's already hit its downside target. I think the money's out of the market, and I don't know where they're at right now. It's pretty similar in the NASDAQ. You've had a pattern of lower highs. You went to the lower Bollinger Band. You bounced. I think the pros were selling. I think they covered. You're coming up. But in this market, if you were to take out this number, 353.75, you haven't done it there. You haven't done it here, but if you take that out, you're out of the downtrend. That does not mean you're starting an uptrend. Again, you have the lower low, you'd have a higher high, and I'd look for initial resistance at 13,467. In the Dow, you got up, just missed the upper band, missed the lower band, you're just drifting here sideways, void of a trend, momentum flat, bias up, no trend on the swing line. In the Russell, no trend on the swing line. You've got a higher high, lower low. That's why this market is so volatile right now. It's not moving in a direction. And I know you're going to say, Ira, look at how close to the highs you are. I'm agreeing. I'm not saying that the weekly charts still aren't friendly. I am saying that these charts, the daily charts, are not in that camp. They are in neutral camp. They haven't done anything right here. When I come to the VIX cash, wouldn't surprise me if the market tries to get down to the 18-day average. But who's in control of the market? The bulls. The market's got higher lows, higher highs. It went to the Bollinger Band. What do I teach? I teach the first challenge generally. If you're not embedded, it's going to fail. I don't think I was wrong. Then we get to the 20-year June bond. Now, the reason I've moved to the June is I had put up, just before doing this, the March, there were no quotes coming in. As soon as I put in June, there was. Maybe the trade's making its move already. I don't know. You lost the embedded reading. Let's come over here. This is Friday's action. You lost the embedded reading. See the reading of 21.99? You had all these readings prior going sideways in the market. If I can, it won't let me go any further than that. I'm sorry. It's because it's June. It needs more dates when I display this big. But it didn't gain it back the next day right away, and it's still lost. This tells me unless you're going to go back under this low, the odds favor right now a contra-trend move back to it's actually a contra-bias move back to 162.17. I have the same thing happening in the 10-year note. There are plenty of reasons that this was a washout low and the market wants to bounce. I know you don't see it there, but if momentum leads price, as it often does, I did check the March and the same thing was happening there. It often leads to that rally. When is it wrong? If you'd make a new low on the whole move. Fed Chair Powell's going to be speaking, I think it's Thursday. Do you think he's going to come on to try to drive rates higher? I don't think so. Doesn't mean that that's what you trade off of, but it's not what I think. In the dollar index, you got down all the way here. You made your lowest low. You finally hit the lower Bollinger Band. What was the market? Oversold, not embedded. You got your bounce and you've had a continuation. I'd look for a failure at 91.34 if you get up to the combination of the 100-day average and the upper Bollinger Band. Are we in a trend? No. What about then the euro? It's the flip-flop. Higher high, lower low. Instead of going to the Bollinger Band, you went to it here. Remember, they're a flip-flop with each other. You went to the lower band here, and then you went to the higher one here. Now you're down to the 100-day average, which is very often a major support number in a lot of the different futures markets. Futures markets, remember, on a monthly chart, most of them, their active time of trading is not as long as you think. 200-day moving averages are hard to come by. You can get it in the grains and the euros, but most money's traded in the front month of these, and 200 days, that's a lot to ask for. So I look at the 100 more in the futures markets. Obviously, spiders and ETFs, you can look at the longer term. But here you are, oversold, hit that number. You're looking for the home run? You do it. I think the smart money's trying to come out there. Could you go to the lower Bollinger Band? Why not? But then I'll stick my neck out. That's where the big money will cover their shorts at 119.96. British pound. Market, when it lost its embedded reading, right here, it lost it on Thursday. What does that normally do? If you don't get it back right away, you start looking for the correction. And here you go down. Okay, do I think this is the end of the uptrend? No, but I think it's a pullback in a market that had accelerated from 135 to 143 or so, 142 and a half. It's due to pull back and have to consolidate some of that. Do I still think we're going up here? I do, way up there. I haven't changed my opinion. In Bitcoin, so in the March Bitcoin, what did we do? We got into a downtrend, lost an embedded reading right back here. What does that often tell you? It tells you that when that happens, if you don't regain that reading right away, look for the 18-day average of closes to be hit. You bounced up. That was where I think the pros went short the market. And I think they got out of the market on Friday. That's all the market's looking for. That does not mean you can't go down here. You are in a downtrend, but I think the easy money came out of the market, and now the market's fighting to see which way. Should the market clear the 52,875 level, well, that ends this downtrend. What kicked up Bitcoin today? It wasn't interest rates or any of that. It's China told Inner Mongolia to shut down the crypto miners that are making Bitcoins there and other forms of coins. So the crackdown's beginning. China's on a crackdown on a lot of things, but they went after that today, which would mean less coins being minted. In the Brent versus WTI oil, you fell back to the support right through here, and this is, as you can see, back on Friday, right here actually, and Thursday and Friday, and then you came right back up through here. Now, OPEC meets Thursday, so you've got to put that into your mind. This is March crude. No, this should be May. This is the May. I've got the label wrong, so forget the label. The chart is correct. Higher lows, higher highs, but something has happened here. I want you to look at this right through there. You lost the embedded reading by only 0.13, I know. But if it doesn't gain it back by the close of business on Monday, which it did not do, game over. I think you could be headed now to that 18-day average of closes. We'll see if I'm right there. This is April WTI, so I had just the wrong label on the other one. Higher lows, higher highs, same thing. You lost the readings here, right through there. You lost this reading. You kept it on Friday, you lost it today, Monday, March 1st, and you're keeping it lost on the early trade, which favors price and the 18-day average coming together. So you'll have to wait and see what goes on there. Heating oil, same thing. Look for the 18-day average to offer the initial support. And what do you do the first time you get down to a Bollinger Band? In unison. Especially with the 100-day average, not embedded. That's where I think the pros are going to cover. And certainly looks to me like that's what's done. So in short order, the market's gone from the upper band to the lower band, not trending. Higher highs, lower lows, a real way to get yourself caught, because what it makes you do is do everything wrong. You're picking tops and picking bottoms if you want to catch what you think will be a bounce. You do that. I wish you the best with it. It generally ends up very sad. I know, running a brokerage company. So I have another hat. I'm a businessman. I've had my own firms in commodities. I'm trying to remember when. It had to be the 80s. So it's what, nearly 40 years? That's a long time. My research. If you're interested in buy, sell recommendations, a synopsis like Reader's Digest, headline news with commentary, headline news, commentary, charts. That's what I do in my market reports. My morning futures videos where I really give you the meat of what I'm doing with my daily written reports. Buy here, sell there, this is why, here's what I want you to follow. Here's the beauty of videos. You get to see the chart formations in real time as I'm recording them. I record my morning futures video 5:40 in the morning. It's generally in your hands before 6:30 a.m. How do you get this? As a free trial if you haven't tried it. Go to our website, under free trial, we'll put it in your hands. Again, if you like what I'm doing here, subscribe on YouTube, that's free. You can also write me a comment or give a like if you like this. I'm Ira, you have a good day.